everlasting, truly everlasting. And true stings, we talk about bad things, only ever bad things. This past year's been a nightmare. I've been losing my shit trying to fight fair. Really all I need is fresh air. Wanna get lost and go somewhere. My girl life never came back. I've been racking my brain trying to think back. Was I truly ever like that?
Yo, what's up, everybody? Happy Wednesday. Trying to get the dog in for the intro, but he's a little camera shy. Anyways, how's it going? Yeah, the stream title might seem a little clickbaity. I do want to pose that there is a potential upside move. Um, I am going to give the TA today and give you what I think will happen. Doesn't mean it will happen. But keep your head on a swivel because there is a good chance that the stock market will break all-time highs again. I've been doing a lot of research about this. Anyone that's in my Discord, anyone that's been following me on Twitter, been doing a lot of research. A lot of research on what happens before or right when recession starts, because I think recession has started. The yield curve's inverted. Technically, we're in a recessive time period, but what happens first? Do we crash? What happens? So actually what happens, or what's happened realistically before every single major recession, we actually have quite a large move to the upside in the stock market. Now, again, large move in the stock market, it's like 10, 20%. So for crypto, it's not as big. But real quick, yo, what's up? What's up, O? Dude, if you want to do another Twitter space either tonight or tomorrow, let me know. I've got a lot of Jack I need to kill, if you know what I'm saying. What's up, Terry? Roman posting the upside question and then being like, hell no. I don't want to say hell no yet. Like I said, I'm going to show you guys a video that will make more sense. This is a guy that trying to get him in like a stream or something if I can. But it's Game of Trades. If you guys ever watch Game of Trades on YouTube, I'm going to play his video here in a moment just to explain what I'm trying to say. Now, granted, with his analysis, I have a more bearish view. I think the markets are just going to nuke. I think we already had our upward move, and it was actually during COVID. Didn't really make sense that the stock market went on an absolute tear during that period, and that's what I think the fifth wave is. But I could be wrong, and if I am, I'm keeping my head on the swivel, waiting to see if the daily chart gives me any kind of feedback on whether or not to long, at least in the short term. But Powell, you were first. Congratulations, man. Or woman. Cashflow, what's up, man? Beast, Bitcoin only. Roman the Bull Slayer. I used to be a huge bull when the market was bullish, and now that it's bearish, I'm not so much of a bull. But even with that said, and continuing on from my stock market research, there have been times the stock market has continued to make all-time highs and crypto was at its all-time lows or even going lower. So as much as I want to say the stock market, it might do well over the next 6 to 12 months, like crypto is a risky asset. And comparing the two, yes, they are somewhat correlated if you zoom out, but interim, medium term, less than a year, I don't think they're that comparable. I mean, the stock market is near all-time highs, and Bitcoin's still down like 50% or 40%. So, all right, let's get into some analytics. So, Dow Jones Weekly. Yeah, I mean, not as pretty as I'd like to see. It looks like we're kind of between. I mean, we're just kind of right in the middle between major support and resistance. I see the possibility of a head and shoulders here. If we'd have to break below this, or even, horizontal break below about 33,000, that would really confirm it. It's not looking incredibly bullish. Like, granted, as much as I want to say this could be bullish, technical analysis wise, I mean, it's making a head and shoulders, which is a bearish reversal pattern. If we look at the last like 13 years, we have a bull market. So this could signal quite a bit of dump, which could say recession. Don't want to get too far into that yet because I still think in the summer we're going to have a pretty strong stock market, meaning we're not just going to dump like 50%. So Dow, we do have this death cross though. In the past, death crosses have not been a great thing. We have a death cross here, which actually marked the bottom, but this was the COVID crash. We didn't get that kind of crash here. Again, another death cross, but really just kind of gave that stagnation before a potential top. I don't like using moving averages for the stock market on the weekly because they definitely lag quite a bit. But I mean, we are at a top and we are basically entering recession. whether that means the stock market continues on its tear for a short period of time, or whether we just continue to go down and sideways, which is what I've been saying. I think we're going to get more of this rather than like an up and then a down move like that. S&P 500, same kind of thing. Death cross is looming, very much head and shoulder like here. Very much a reversal pattern. Now, granted, if we zoom in, we can actually see a possible inverted head and shoulders here. So if we hold this area, this 4,400 area, that could signal a bounce to the upside. Just keep in mind, if we hold this middle line here, we could see newer highs. If we break through this middle line here, I have pretty high confidence that we're going to continue going lower. I also have data to support this idea, and again, we're going to show that YouTube video here in a moment. But for the meantime, I'm definitely leaning more bearish than bullish here. NASDAQ, we have a breakdown and retest of the 50 weekly moving average, a pretty bearish scenario, just based off objective TA. Again, looks like our moving averages here on MACD are starting to reject. And ultimately, this is a very bearish scenario. Breakdown, retest should continue to go lower. The NASDAQ has been a great indication for crypto because it's the tech sector. Usually when the NASDAQ starts to drop or drops significantly, crypto also drops. Total charts, rejected right where we thought they would. We covered this on Monday. I'm not going to go too far into detail, but it looks like we rejected right where our golden line was. We have a death cross here. We actually broke down through the 50 weekly, kind of had a fake out bull trap here, and now we're back below the 50 weekly. Again, another very bearish scenario. We can also see that death cross in here. I would expect that this support be tested. If we lose it, yes, we are looking at a fat dump. I would imagine that this area is where Bitcoin would be 30K. This level here would be probably 36 to 38K. So, I fully expect 38K to be retested. That's just my personal view. But will 38K hold or not is the question. Total 2, same thing. We have a fake out bull trap back below the 50. I would imagine for this Ethereum, somewhere in the 2,700 area. So if 2,700 doesn't hold, Ethereum and alts are going to absolutely shit themselves. Total 3, don't want to get too specific on altcoins because I still believe altcoins have a long way to go until they find their bottom. But it looks like, again, a fake out bull trap should hit this area of support. If we lose it, it's a far drop down. There is not a lot of support between 634 to 400. That would be about a 50% drop, and a lot of your altcoins would see quite the harsh downside. Bitcoin one day probably to 42.7. It's possible. I still don't get why below 35 isn't legit to start your DCA, because 30K is my capitulation point, and I'm not starting until I see capitulation. That's just not an option for me. So, DXY, extremely bullish. Breaking 100, I said if we break 100 and hold above 100, we are probably going to see a big upward move and then a pullback, maybe some consolidation before we continue even higher. We've been tracking this for quite some time. This is extremely bullish. We've been holding this diagonal uptrend for quite some time. Just going to take the moving averages off here so it's a little bit easier to read. Like I said, we spotted this double bottom. It's been on a tear both technically and fundamentally. I still believe the dollar is extremely bullish, and I have no reasons to think that this is going to break its uptrend. Could we maybe reject this area, come back, and then continue higher? Sure. But for the most part, this looks extremely bullish. This is a very, very bullish technical chart. So getting into Bitcoin, before I get into Bitcoin, I'm going to play this YouTube video. Just some of it, we'll skip through some parts. I just want you guys to get the gist of what I'm trying to explain, because Game of Trades goes through it in very data centric in ways that I could if I wanted to, but I think he just, it's already there. I'll give him the credit and he can show you guys. But for now, let's take a look.
Hello and welcome back to Game of Trades, your #1 channel for videos on the stock market and cryptocurrencies. This video is going to be focused on the S&P 500, and most importantly, we're going to be talking about this ratio here. A lot of people have been asking me about this, the J and K to...
So this right here, the J and K ratio, this is why I believe the stock market is not going to make an all-time high. Now, obviously, I'm bearish biased. He's going to give you both bearish and bullish points. He is more bullish biased than I am, and he may or may not have more experience. I know he looks mainly at stocks, so he probably has more experience than I do. But just because the stock market makes all-time highs does not necessarily mean that Bitcoin and crypto will follow. We know that Bitcoin and crypto is risky, and I just kind of want you guys to take this in.
TLT ratio. This is the ratio between junk bonds, so low quality, high probability of default bonds, and treasury bonds. So
what this is basically saying it's like an inverted yield curve. It's like another indicator for the yield curve. So we're just gonna kind of skip through this, and I just want you guys to see. Let's see. I just kind of want you to see how it compares to the stock market. So here's where the yield curve compares to the stock market. Let's play this.
Right? Yield curve inversion in 2006, massive return throughout 2007. Here, November 2018, yield curve inversion, massive returns throughout 2019. Yield curve inversion in 1998.
So one thing I want you guys to see here is there's actually bearish divergence here between the yield curve inversion. So we had a COVID yield curve inversion, actually before COVID. We had a yield curve inversion, and we pumped all the way up before the COVID crash. Now we're seeing bearish divergence where we have a higher high in stock market price, but a lower low with yield curve inversion. If we compare this to 2007 to 2009, we had this yield curve inversion here where he states that we essentially had this wave 5 move where we pumped all-time highs right before we went into recession and dumped over 50% on the S&P 500. Now I want you guys to note right where that second touch is on that yield curve inversion, and look what happened right after. Here is where your bearish divergence is, and again, bearish divergence. He even points it out here in the right before 2000. We have a yield curve inversion here, and we essentially bottom out, continue up to all-time highs. Well, now we have a lower low on the yield curve inversion right before we dump. I'm assuming about 30 to 40%. Again, what is this, about 1650 all the way down to 705. So yeah, about a 50% drop. Again, just something to keep in mind that although the yield curve inversion has stated an upward move, which here we have one. We have one here. Also, you could even argue that during COVID, we had almost a yield curve inversion. We probably should have. I don't know how it didn't. I think it's just because it happened so quickly. But here we're seeing those divergences, and then again, big divergences here. So something that I've compared his data with mine is we actually have a bearish divergence right before we go into recession, which is part of the reason why I'm leaning more bearish than bullish.
Massive return. So
Lord, his name is Game of Trades, and I would say he's a good counterpart to what I'm saying. He provides a lot of data-centric views. He's very, very intelligent. He does compare crypto and stocks, but if I'm going to be honest, I think he's better with stocks than crypto. But for that reason, he's essentially measuring the economy, what's going to happen in the stock market, when will recession really kick in. So yes, definitely worth watching.
Yes, it signals a coming economic downturn, but you can still have a very strong equity performance. In fact, these were some of the strongest stock market years in stock market history.
Again, although that's the point I'm trying to get you guys to look at is the divergences between the yield curves bending down and going to or zero or below zero. So just skipping through here, I want to show you guys the last point. So this here is the J and K indication. Basically what this is saying is when this pumps up, so when we hit this resistance here, we are risk on. As soon as we hit resistance, we go risk off and we start to dump. If we're risk on, the markets pump. If we're risk off, the markets essentially drop.
Clearly proved itself as a very, very important line of resistance. Well, if that happens again, we can expect the bond market to
Yeah, I'll
enter
explain
a
capitulation here in a
risk-off
moment.
environment where J&K would be outperforming TLT. Now, I don't like to rely just on technical analysis, right? And we don't. But when this type of setup aligns with, for example, a yield curve inversion, which is pretty much the ultimate risk-off signal, then that gives me a pretty high degree of confidence that there's going to be some buying pressure here for TLT, and there's going to be selling pressure for J&K.
Again, J&K means risk on, so those would be your essentially selling stocks. Once we hit that resistance, TLT would be your treasury bonds, where people go into bonds because they think the stock market will dump a lot harder than bonds will.
People are going to de-risk by selling junk bonds and buying treasury bonds. Now again, this might sound very, very bearish, but the fact of the matter is that if we do have a rejection, that doesn't necessarily mean that the stock market is heading straight for a bear market. And the perfect example is here, right? We had a massive, massive move down on the J&K divided by TLT ratio. Let's take a look at what the S&P 500 did throughout this period. It rallied massively, right? Now, we've already talked about how similar the correction from 2018 is to the correction that we've seen now, right? We had the Federal Reserve tightening throughout this period very, very aggressively, and yet we had a yield curve inversion, and yet we had the yield curve invert throughout this period. And so once you had that yield curve inversion, you had the market start to anticipate easier monetary policy. That's exactly what happened throughout this period. That is why the rally, that is why the stock market went from 2,400 points to...
So you guys are more than welcome to watch the rest of the video. I just kind of wanted to give you an alternate view and show you why I potentially think there could be a new all-time high in the stock market, but it will be short-lived. Do I think it's worth buying, investing in? That's entirely up to you. Personally, I sold my stocks in September. I don't think it even matters, so I had to disclose that to you, but that's where I decided I don't think this market's continuing any higher. If it does, then I miss out on 10%, but I'd much rather miss out on 10% than see a 50% decrease in my portfolio. All right, so biggest thing I'm going to cover today, and a lot of people keep saying 50K this, 50K that. The reason why I don't think 50K is possible anymore, and why I think although the stock market going up does not mean the crypto goes down, or sorry, goes up with it. So one thing that in the video, if you noticed, in 2018, the stock market kept going up. If we look at the S&P 500 in 2018, let's even start at the beginning of 2018. So January 2018, really up to April 2018, we bottomed, and the stock market continued on its tear to all-time highs before dumping again in December of 2018. So if I go back to Bitcoin, in January 2018, we dumped until December 2018, right when the stock market topped. When the stock market topped, Bitcoin consolidated and then went on a big miniature bull run, so to speak. So although the stock market was putting in all-time highs throughout this period, Bitcoin was not. Bitcoin was actually going down, hit capitulation, went sideways. When the stock market started going down, Bitcoin actually started going up. So inversely correlated in that respect. So again, biggest thing I want to cover today and why I don't think 50K is possible. So I don't know why people don't really look at weekly, and I find it very rare that people look at daily charts. Daily, weekly, and monthly. So biggest thing I want to point out here, and I'm not trying to be a crypto savvy guy here. I'm not going to pull out the Amazon chart. I'm only going to pull out this chart because it's been consistent with TA, and we're going strictly off data and what we've had in the past. So in 2014, we have this death cross, the 20 over the 50, and I know a lot of people are like, Ruben, the death cross is the 50 over the 200. Guys, the death cross is any two moving averages, a lower crossing under a higher. It's all personally opinionated, but that's, to me, it's two major moving averages, especially weekly moving averages, crossing under each other, or, the smaller one crossing under the larger one. So we have this death cross in 2014. We lose 63%. 2018, death cross, drops 63%. One thing I want you guys to notice, we actually break through the 50 right here, break out, retest, continued, and eventually capitulated and dropped. From that retest, we dropped 60%. Keep that in mind, because now we are actually seeing death cross. We have a breakdown of the 50, a retest of the 50, and again, zooming in here, a retest of the 50 weekly moving average. We could not hold above it. We actually dump. Where could we see capitulation? Well, we've seen that this 30K area, similar to the 6K area here, is acting as major support. We've bounced off it once, almost twice. We really had this big run up bounce here. So again, major support 30K. I think losing 30K, we don't have any real support until about 20. There is no, like price literally just went up without any sort of logistic pullback. So 20K, that's that'd be a, let's even see, from the retest, that'd be a 60% drop, similar to 2018. Very weird how that data is just so ever consistent. This market seems to follow consistency and patterns very near and dear, because this market's based off of supply and demand. So really quick, why is 52K not possible? Well, we already had our breakdown and our retest. Could we see something like this where we have, some sideways movement before capitulation? I absolutely think that's possible. I think that we'll probably go down, maybe do some of this, and then dump. I really don't think all-time highs are possible at this point, even if the stock market makes all-time highs. And we've already made the comparison that during this period, the stock market was making all-time highs. And let's even see if I can compare some data here. Let's see, where is the compare button? If anybody knows where it is, I think it's right here. Let's see. Oh, did it not? Hope it. Oh, it's not comparing it as it's not comparing it as the value I want it to. Let's see. Yeah, it's not comparing it the way I want it to. All right, well, we're just gonna get rid of it. If it'll even let me. There we go. So if you compare this data, what I'm trying to say is just because the stock market makes all-time highs does not mean that crypto will as well. We can see in 2021, we have really not made a significant high, all-time high in Bitcoin, even though that the stock market has continued on its tear. Again, I'm not under the impression that crypto is going to make all-time highs just because the stock market does. Remember, crypto is a very risky asset, and people are very risk-off right now, even if the stock market continues to go up. But with that said, let's go into some TA. We've covered the weekly. Let's go into the daily here. So a couple things I want to note. We essentially have been in this bear flag. I'm going to call it a bear flag. You guys can call it whatever you want. But to me, it's a bear flag. We've been going down. We have this big flag. We've been ranging in it. And I still think it'll end up going to the downside. So with that said, a couple things I want to note. We had bearish price action on the way up. We had volume going down, price going up. That's why we rejected very largely at this resistance. But one thing I want to say, we actually have volume going down now as price is going down, which is technically bullish price action. But between the last 2 days, we have this, which is volume going down, price going up. To me, all in all, because I have, one bearish price action, 2 bearish price action, and 1 area of bullish price action here, possible bullish price action. And let's even look at another exchange real quick. Ooh. Okay, never mind. This changes a lot. So on Binance, there was actually more volume, and now volume's increasing as we're selling. See, this is why we look at our 2 major exchanges. If you're part of my trading class, you know that we look at Coinbase and Binance, but Binance is usually the most accurate with volume, as they have the most volume compared to any exchange. So real quick, if you can see on Binance, we actually have volume going up as price is going down. Interesting. And you can clearly see here that volume is now going down as price is going up. So what does that tell me? So this tells me that basically, and we're going to look at the Coinbase chart just because I have all of my support and resistances drawn, or my supply and demand zones drawn. So what does this tell me? 1, this was a bearish move. This is a bearish move if we look at the Binance. So I'm just going to put I can't even write a B. I hate this drawing tool. So this is bearish price action. And this is bearish price action. We have 3 waves of bearish price action. We also see like a slight cup and handle here to go all the way down. Why do we have 2 green days? These 2 green days are to allow the hourly charts to cool off, to have a pullback. We know that nothing moves up or down in a straight line. Even when we were going down, we still had these areas of pullback before continuing to the downside. But what does this tell me? This tells me that we are going to possibly hit this area of supply and reject and go all the way down to support. Support being 37.5 to as low as 36.8. About 38 to 36.5 area is my next area of demand. So with that said, all we've seen since March 16th, even before then, I mean, this whole move since November, we've only seen bearish price action. I'll draw it all for you. We've been going down, volume's been increasing. Here, volume going down, price going up, bearish price action. Again, here, volume going down, price going up on this move. Again, volume going down, price going up, bearish price action. On the Binance chart, because Coinbase isn't showing it, this is bearish price action. Volume or price going down, volume going up. And then now here, these last 2 days, this is bearish price action. So this whole thing is literally just bearish price action. And it's amazing to me that people aren't seeing this and aren't using this as a data point. They're seeing consolidation and they're like, oh, this means that we're going to go up and we're going to break all-time highs. Guys, consolidation in a downtrend generally means that we're going to continue down, especially without some kind of reversal pattern or area of reversal. And you're going to tell me this, and I've seen this. People are like, this move is just like May through July. And no, it's not. I can show you right now that it is far from it. So here we actually have a descending wedge or descending channel. This is an ascending channel. Ascending channels are bearish. Descending channels are bullish. So another note, we have bullish price action. We have volume going down, price going down. That's a very, very bullish price action. That's why I was buying in this area. And I still have the buy orders, and I'm still willing to show them if I get called out on some on that aspect. But here we have an ascending channel, which is already bearish, and we actually have volume going down from this bottom to the top as price is increasing. We are making higher lows and higher highs as volume is decreasing. That is bearish price action. There is nothing bullish about this move. These are not equal. These 2 moves are not the same thing. And if your favorite moon boy or your favorite investor or trading account on Twitter is showing you this and they're saying, no, these are the same things, you guys are idiots, we're going to all-time highs. Guys, they are far from right. I've just pointed out some very significant data points on why that's not correct. So you're more than welcome to believe me, but, do whatever you want to do. So in the interim, let's say this is bullish and we are going to see all-time highs. What do I expect? So one, I expect this demand zone to be tested. One big reason is because of this. Because of this low volume going up, that's usually a dead cat bounce. If I pull out the 4-hour, its volume is going down as price is going up. And we have the very large random volume spike here, which to me just for liquidations of late shorts. That's all that is. And we're not even back above a supply zone. We have to get above 43K to even consider this short-term bullish. Capitulation is when smart money buys. Capitulation is when the entire market decides that the losses that they've taken aren't worth holding anymore. It doesn't matter whether it's retail or large investors. Volume was bullish on Ethereum breakout a couple of weeks ago. Are you seeing anything different? It actually was bullish. So Ethereum was looking very, very solid for a little while. We actually have price or volume increasing as price is increasing. We have a nice double bottom here. But now I'm actually seeing exhaustion. So this was the exhaustion volume. So volume started going down as price is increasing. We also had multiple areas of divergence, whether it be the 4-hour or the daily. So we have divergences here. And then obviously the MACD cross and exhaustion here on the buying side. I'm not seeing anything bullish for Ethereum so far. Again, similar to Bitcoin, we have a dead cat bounce with volume. And ultimately, I mean, we could just range and then continue lower. I think that's the most plausible scenario. Inverted HNS on the hour. Okay, well, I don't really care what an hourly time frame looks like, and this is not an inverted head and shoulders. This is an inverted head and shoulders looks like this. Your head is deeper than your left shoulder. Our head is actually equating, so I would say it's more of a double bottom, but because this volume is so weak, it's not a double bottom. This whole impulsive move is just to liquidate shorts. That's all it is. You can even tell it's starting to get weaker. We have areas of divergence now. This is not going to hold up very long. If you're looking to take a short, I'd say anywhere once we get inside this red area of supply. But ultimately, it would not shock me if we just dumped. I'm not currently in a trade. I sold most of my short. I'm in like a very small trade. I sold most of my short from 47K. Made a nice like 17% on it, and I've just been chilling. I'm waiting for an opportunity on the daily. On the daily. Thank you, man. This is very informative content. Appreciate it. Hey, anytime. Nice information. Thank you. How do you think Bitcoin and Ethereum how low do you think Bitcoin and Ethereum can go? That entirely depends on how harsh recession is. If recession turns into a depression where we have a 10-year or a decade long of markets going sideways and down, I could see Bitcoin going to 3K. Very, very slowly, but it'll happen. Finally, someone real and not a hype train. I'm only a hype train when I have my pre-workout during the live stream. Thank you. What is your probability assessment for the scenarios recession now or short-term all-time high? I mean, I kind of gave, so if you go back in the stream, I played a video and gave some scenarios where that's possible. But just because the stock market continues to break all-time highs is not necessarily a correlation with crypto. In 2018, the stock market continued to break all-time highs, and crypto dropped about 80%, or at least Bitcoin dropped about 80%. God, Eddie cups are expensive, but man, this water is cold all day. God, it hurts my teeth. Whew. Sheesh. All right, well, let's keep trucking on. So yeah, just kind of another area of validation here. Just a random, like large, so this candle is very large, right? Very, very large candle. But it equates this candle here in size. Yet volume is going down. Our volume is very much lower, which tells me this is a very weak bounce, and we will most likely continue back down to support. Also, this is not a support area. Yes, we're bouncing. Maybe it's a super low time frame support. Maybe we just bounce to bounce. I mean, sometimes that happens. But this is our major support area, at least on the daily. Yeah, I mean, 12-hour MACD, it just doesn't look confident enough. I mean, this still looks like it's going to continue lower. Yes, it could cross, so we could see like a little cross, but I think we'd still bend down, and we'd have to really go sideways. You really want to see this before trend could possibly change, which we know that this is a fake out. We've been calling that a fake out for weeks, and if you listen to me, thank you. Check ETC, big move up, plus 50% soon. I don't really care about altcoins, man. We could be at a market bottom because Bitcoin loves to do the opposite of logic. Actually, Bitcoin's been following my TA really for like the last year. The only move I've really missed was this one. And I actually ended up buying the bottom here, and I sold it like right about here. Unfortunately, I really didn't think that was going to stick. And I was really watching the weekly time frame. If I would have held it, I would have absolutely killed it. But if you've been following along with my tweets, with my Discord, with the live stream, we've effectively called these macro moves very I wouldn't even say very precisely, but on a macro term, I mean, we are saying this is not a sustainable move. We are not going to 50K. We are not going any higher. I said 45K was the ceiling. I mean, granted, I missed it by about 7-8%, which sucks. But 7-8% in the crypto market is not a lot. This the Bitcoin fluctuates like 20% every 2 weeks. Hi, man. What do you think about mining costs will affect the price action since miners will start to hold until a run up? Wherever this notion that miners are holding, I believe they're actually looking to sell. Also, I don't think miners. I don't think like the miners have that much of an impact on this market. I'm going to be honest with you. People were blaming the May crash on Elon Musk mining, all of that. This was a distributive pattern. Like, that's a head and shoulders. We broke below it, we retested it, and then we broke down. This was all distribution. The answer was in the charts the whole time, and people were blaming miners, Elon Musk, Joe Biden, Donald Trump, their family cat, whoever else. And the answer was right there the whole time. We were in distribution. We were calling for that for a very long time. Really since April 15th. Like, in mid-April, I was like, nah, this is not healthy. So, we can go on that notion that, it was Elon Musk's fault, but here is a head and shoulders. Here is your neckline. We broke slightly below it, which is perfectly normal with the head and shoulders, broke back above, came down, broke down again, retested, and then dumped like 40%. The answer was there the entire time, and if you bought this, or you bought this, I don't know what to tell you. The answer was there the entire time. It was not Elon Musk. It was not Joe Biden. It was not because the miners sold. We were in distribution, and a lot of people took profit. Bounce might be off the 3-day 200 moving average. Check it out. I don't really look at multiple day charts. I just look at the daily. I think if you put too many time frames in your analysis, you're gonna mix things up. Just keep it simple. I use the daily, the 12-hour, the 4-hour, and sometimes the weekly. I don't really like looking at 100 different time frames, and I know there are a bunch of different time frames here, but I hardly use them. Yeah. So, all right, let's look at the 4-hour. So 4-hour. Let's even look at Binance. Yeah, okay, so a big wave there. I think that's just liquidate shorts. Looks like we're finding some resistance or starting to enter resistance again. I would enter a short if you were shorting in this red area, maybe closer to the middle. But ultimately, this is not a sustainable move, and I'm anticipating this to at least come back down to 39.5. If 35.5 doesn't hold, you bet it's 37K all day. All day. And the thing that I don't like, again, if you're late to the stream. What's up, buddy? The thing that I don't like is this volume is increasing and this volume is decreasing. That's a very big sign of bearish price action. What would a Tether crash do to Bitcoin? I don't think Tether is going to crash. I think 80% of Tether is legit, and I think 20% isn't. And 20% isn't going to crash this market very significantly. I strongly believe in TA, and I don't think about external factors, but I always ask myself if the miners would allow Bitcoin to drop until 3K. The miners aren't in control of this market. It is institutional control of this market now, by far. Any tips on where to stake stables and wait for a crush? I would go with anything that offers over like 6 to 10% in interest. I mean, Crypto.com, BlockFi. I mean, there's a ton of options. I think Coinbase also has one. How do you know a divergence doesn't play out? Only volume indicator? Because I look at multiple indicators and I go with the one that makes sense. If there are 10 bearish indicators on my chart and I'm seeing both bullish and bearish divergence, I'm going to go with the bearish divergence. You have to remember, it's one area or one indication when there are 10 other indications that tell you a different story. You should go with the one that leans more to that side. But yeah, guys, I think I've pretty much covered everything I've wanted to. Like I said, I think it's possible we have an upward move, but before then, I think we're going to visit this 38K area. If we lose 38K, we lose this ultimately the flag. I would see at least a 30K, probably back to 36 before continuing lower. If I was to tell you that I wasn't biased in this, I very much believe that this is going to happen, what I have drawn here. However, if we were to flip back to bullish or possibly break into the 50K area, I would like to see some type of scenario like this where we have a nice clean double bottom. Maybe price action continues to rise or volume continues to rise with price, giving bullish price action. But for now, please be patient with your longs. This is literally just a dead cat bounce. It is most likely not going to stick for very long. And even if so, even if we break 43K, you're still looking at 45K, which is a massive resistance. And you're just not going to break it with this volume. Could you unblock me on Twitter, please? Just message me in Discord. Message me your Twitter handle. I only block people on Twitter if you're an asshole. So if you're an asshole, like, you're going to stay blocked. All right, guys, real quick. If you're interested in new exchange, I recommend Bitget. There's links in the chat description and in the YouTube description below. Please subscribe if you haven't already. If you want notifications on the live stream, we're live Monday, Wednesday, Fridays, usually around 5 to 6 p.m. Eastern time. Just depends on when I get back from the gym. But for the most part, pretty consistent. So if you want those notifications, I'd really appreciate a like and subscribe. We also have a free Discord. I believe the link is in the chat and the YouTube description. Pretty active in it. Got over 20 trading mentors. Would really love to see you there. With all that said, guys, please be patient, use risk management, and good luck.